I think today is one of the key days in 2025 for the crypto market, because the way the price closes today or in the next few days will determine the market's direction for, I believe, the next several months. Let me explain what I mean. The all-time high was broken, and right after the all-time high was broken, we immediately saw a bearish engulfing. In other words, we had a large seller here, whereas in a strong market, when a new high is reached, the price should always shoot up vertically. But that didn't happen. There is no buyer here. Even if there hadn't been a strong seller, the price would have just stagnated here little by little, hovered for a while and then drifted downward. At that point, perhaps a seller would have come in, so the very fact that there's no buyer already indicates that the market is not strong. However, let me switch to the hourly chart again and show you what was happening intraday during these moves when the price was reaching an all-time high. After every surge, after every spike, a seller would immediately step in. A seller stepped in here, a seller stepped in here, and here he stepped in just a little bit. Here he placed limit orders. You can tell because the price stopped moving higher here, started pressing up against the level, and the seller couldn't hold out any longer and exited here with market orders. He was also present here during the surges. So there is a seller here, the seller is active here, but he is not entering with market orders. That is, he does not push the price down, he is apparently not interested in the price falling, he becomes a market buyer. So we have market buyers buying up, and immediately the seller is selling off here. Here's a market buyer during the sell-off, a market buyer at the stop price, and here is the only moment where the seller actually threw volumes into the market. This immediately led to the formation of a descending triangle at the all-time high. A bearish pattern. In other words, you need to pay much closer attention to this than to any other descending triangle, to any other bearish pattern, because this happened at the all-time high. And then this pattern was also broken downward. And well, apparently the seller realized that with just a single move in the market, with just one action, the price had already changed its trend from the all-time high. I assume that the seller wants to offload a large volume, but is not interested in having the price drop too much. Perhaps the volume is so large there that the price needs to stay at this level for a while in order for him to exit. Why do I think so? Because after the drop, after the breakout of this triangle, where did the rebound come from? From nowhere. There were no levels here, nothing at all. The rebound just came out of nowhere, and it happened simply because the seller was absent. That's it. Here we no longer see the presence of that seller who was dumping coins to the first available buyer, the one who was pushing the price down. This is evident for several reasons. First of all, yes, the rebound didn't happen from any level, it just came out of nowhere, out of thin air. That's the first point. Second, on the daily chart, volumes are reduced. This means the market expects that there aren't really any buyers here, and accordingly, no sellers either. For the past 2 years, I've been trading on the Bybit exchange. It's the #1 platform in terms of trading volume and liquidity. That means your orders will be executed here at the best prices and with minimal slippage. Just on this alone, you'll be saving several $100s a month compared to trading on any other exchange. In addition, the fees here are low, and if you register using my referral link in the description, you'll receive a bonus from $50,000 to $30,000 depending on the size of your deposit. Right now, go to the link in the description, then click this button and see the size of the bonus you'll receive for registering. On average, my subscribers receive about $100 for registering on the Bybit exchange. But if you have a large deposit and a corresponding trading volume, you can get up to $30,000 as a bonus. The link is below. Register, it only takes a few minutes. And pay attention, there is no level here, nothing at all, yet a bounce happened out of nowhere, but the bounce is just as weak as it was here after the bearish engulfing pattern was formed at the all-time high. In other words, the absence of buyers can be seen on a characteristic chart, where the price seems to rise for several days, but the volumes are decreasing at that moment and the price barely goes up. So we had a strong bearish impulse and the bounce is barely noticeable. In other words, what was visible here is being drawn in exactly the same way here. The only difference is that here we were still within a bullish trend, here the trend is no longer bullish. So here it's even more obvious to the market that this very weak movement is unlikely to lead to further growth, so there are no buyers and no sellers. We need to wait either for a breakout of this resistance level, what is it, 106,800, 106,800, a breakout with confirmation. Most likely, in this case, we will see a surge in volume, because the market is waiting as volumes decrease. This is typical for a market that is waiting and doesn't understand in which direction it should prioritize trading. And if there is confirmation at 106,800 during a volume spike, this will lead to growth lasting several months. And yes, here it will naturally be necessary to look for long positions in Bitcoin at the all-time high, as well as in altcoins. But I actually think that this will not happen. I think that we've simply run into the absence of sellers with this barely noticeable small rebound to the mirror level. Here we have the mirror level, a descending triangle from the resistance, and we've hit this point. Look, here too, in fact, the seller isn't particularly active, but as soon as the price starts to rise, boom, there are some sales, it rises, boom, there are some sales. I suppose this isn't the same seller as here or here. It's not the same seller who was exiting at the highs here, because the nature of the movement is completely different. Well, there is a small seller, just a little bit. There's almost no buyer. We've hit a significant resistance zone. Right here, there was a similar bounce of the same nature as now. That led to a decline, it led to a trend reversal, to the formation of a downward setup at what seemed to be the strongest point in the market, at the all-time high. So, in reality, there's nothing positive here. I'll change my stance if the price consolidates right here, above the 106,800 level. Until that happens, I won't be buying or going long. Let me remind you that I sold my Ethereum. I had Ethereum, I sold it, citing the weakness of the market, and, well, on the air, pay attention, it's the same thing. We have a resistance level that will most likely only be broken if Bitcoin also shows strength. In other words, if Bitcoin goes up, Ethereum, for example, consolidates above the 200-day moving average. Yes, in that case, I resume some long positions here. We'll see how things go from there. Subscribe to my other social networks, Instagram, Telegram there. The content comes out faster and you see my positions earlier. And of course, subscribe to my YouTube channel as well. I'll talk about it here too. But that's in case of growth. I hardly believe in that scenario. And pay attention, June has just started. Do you know the saying, sell in May and go away? That's something you really have to take into account. I even exported historical data on the crypto market, and it wasn't difficult at all. Yes, you just go to TradingView, click the arrow in the top right corner, select export chart data, and then analyze it in a spreadsheet. It's very simple and straightforward. In fact, from October to May, the market historically performs very well. But from May to October, it performs very poorly. Specifically for the crypto market, the worst months, as I've noticed, are September and August, especially August. But they both fall within this May to October range. And sell in May and go away coincides with the all-time high, a lack of strength, a major seller, a shift from an uptrend to a downtrend, the potential for a double top, and the possibility of some kind of head and shoulders pattern here. All of this will lead to a multi-month decline if the trend reversal is confirmed and some kind of head and shoulders pattern forms. Well, if a head and shoulders pattern forms here, then the potential target for this pattern is roughly around here. There is support here, and after that the market will be watching and deciding what to do. We already have a potential double top forming here. There, any sneeze starts the FOMA. Everyone who bought in at the high starts dumping their assets. This leads to a break of the support level. There really is a double top forming there. So it's very important how the market holds right now. Will it bounce off the resistance, or will there be a breakout at this level? Once again, I have exited the market. I'm betting on further decline here. I've explained why. If I'm wrong, and I start to see the market differently, if it consolidates right here, and a couple of ideas, I've already shared them. But in case you haven't been paying close attention to my videos, or if you aren't subscribed to my other social media, right? A couple of ideas. First, Ethereum. I just showed where you can buy it. Secondly, it is a throne. It's a very bullish, super bullish setup. This pattern here is like a slingshot, the level, the breakout of the level, and consolidation above the level. There's potential here for a new high. And you can only buy if the price consolidates above this local level, then there will be potential for a new high. This is in case I'm wrong, and if the market actually starts to grow from here instead of just bouncing. And if it turns out that I'm right and the market starts to fall, take a look at the Dash coin. It's at its all-time low. Well, almost. Here was the all-time low, and now it's slightly above, but basically at the same level. With any slight drop in the market, it will most likely break through its all-time low. When it breaks through, FOMO starts. Everyone who bought in here at the highs with huge volumes, you can see the price was right here, they start to sell off. This leads to a dump, a flash crash for the coin, minus 50%. And you can start scooping it up here, picking it up for about 10 bucks. That would be an excellent entry point. This is the scenario for the next month or two, in case we get a bounce here from the mirror level after a retest. I'm leaning towards this scenario. And the main scenario I'll be watching is Dash dropping and then being bought up after breaking through its all-time low, something like that. Right now, keep a close eye on the market. The direction in which Bitcoin closes will determine the movement for the next several months. I've explained why. And an important nuance, all of this with Bitcoin is happening against the backdrop of overall positivity in the American stock market. Nasdaq is practically at its all-time high, and here the S&P 500 is also breaking through resistance. During the day, of course, it dips a little, but overall it's a bullish setup. We're breaking out upwards, also not far from the all-time high. A V-shaped bottom formed here. We easily shot past the resistance level. So in terms of the retest, everything looks good. Here the market is bullish, and against this backdrop, Bitcoin is reacting very, very weakly to the all-time high. It's declining, and some seller is showing up here. Even without a strong desire to push and sell into the market, the price still drops due to the lack of buyers. And yes, purely from a technical standpoint, it's a reversal setup at the all-time high. A very strong pattern is breaking downwards. This needs to be taken into account. A retest is happening. This is the best entry point for short, but this is just basic technical analysis, like third grade level. If you were taught technical analysis in school, I believe that here you need to be very careful, watch the market very closely, and as a priority, of course, close long positions. I just explained why. Because this is a bearish setup. Alta looks pretty good overall, by the way. Most coins seem to be at the bottom, maybe even showing some kind of breakout from the bottom. But this will only be relevant if Bitcoin surpasses its all-time high, if it consolidates above it. So if the bullish scenarios are in play, then yes. Then you get this kind of distinctive characteristic U-shaped bottom forming on altcoins, with classic head and shoulders patterns appearing everywhere you look. There are actually some coins that already seem to have taken off from the bottom, as if they've suddenly shot up and are now clearly hinting that perhaps all the altcoins might soon take off in a similar way like this, suggesting overall that the market is looking quite strong, healthy, resilient, and exceptionally robust. But pay attention. If there were just a couple of such precedents in the market, then actually you could go long on altcoins right now, those that are forming head and shoulders patterns at the bottom and so on. But we're dealing with a market where there are also other kinds of precedents. Let me show you some examples. All of these are at the bottom, more or less it doesn't really matter. Let me find something a bit higher up now. Here we have the following precedents. We have cases where seemingly the price has formed a bottom pattern, and starts to break out above resistance. It breaks out and immediately there's a sell-off. It breaks out and there's an immediate sell-off. Here, the bottom was even broken through. Well, the breakout here wasn't particularly strong, right? But still, after the breakout and the vertical bullish engulfing, the price instantly dropped to a new low on the very same day. That almost never happens. And now, when the question is whether the market is strong or not, that shouldn't happen, especially not in a strong market. Here's a more illustrative example. Here we have a bottom resembling a head and shoulders pattern with a neckline and a bottom level. We take off vertically. By how many percent do we shoot up in a day? Let's say we shoot up by 50% in a single day. So again, a vertical takeoff, a breakout from the bottom, but on that same day we close at minus 22%, and the next day we drop another 15, and then we barely manage to hold at the bottom. Yes, there are precedents where the price shot up as if from the bottom. But pay attention to the fact that there are cases with coins where the price shot up and instantly came back down. In other words, they offset each other. If there weren't such patterns on the market and just a couple of coins with these kinds of moves, then yes, you could go long on altcoins right now, even though Bitcoin doesn't seem to be performing particularly well. Given that there are coins showing this kind of pattern, you need to be very careful. And in general, I don't recommend buying altcoins right now until we're sure the market is actually bullish. Moreover, those coins that did shoot up years from their highs, they dropped 40% in just a few days. Is that really typical for a bull market? Probably not. A bull market is usually characterized not by such a sharp spike, but rather by a rise that continues over several days, followed by consolidation near the top of that vertical move. And the higher the consolidation is relative to the maximum, the stronger the market is, and the more likely it is that there will be another breakout with further vertical movement. A strong market almost never looks like this, so be careful. I'm leaning towards a decline, but if I'm wrong, I've already explained how you can recognize that I'm wrong and what you should do. Subscribe to the channel, follow the link in the description to Bybit, register there, make a deposit and get bonuses. I trade on Bybit, that's it. And follow me on my other social networks. The links are also below, there's more content there. Good luck!